Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a little bit about the uptick in FBAR audits and examinations that have been happening in 2024. And 2025 is going to be just as bad, if not worse. So let's talk about what you could do to try to prevent the audit. If you can't prevent it, what you could do if you're under audit. So earlier this year, late last year, the IRS made it known that in 2024 they were intending on increasing the number of FBAR audits, right? Foreign bank and financial account reporting. It's typically directed at high income earners, wealthy taxpayers, expats, things like that, to kind of refresh FBARs, foreign bank and financial account reporting. Certain taxpayers who have ownership or an interest in foreign accounts, assets, investments are required to disclose them each year on various international reporting forms. We're going to focus on the FBAR. Some type of accounts include bank accounts, investment accounts, mutual fund accounts, stock accounts, pension, life insurance, etc., right? There's lots of different items that need to be reported on the FBAR. The threshold is relatively small. It's if you add up the total value of all the accounts, if on any given day that value exceeds $10,000. So for a lot of taxpayers, they may have like a pension plan or a couple of small accounts in different countries where they lived or operated, and next thing you know, you're over that $10,000 threshold. So two main forms are the FBAR and the 8938, and they kind of go hand in hand. But since the IRS specifically referred to FBAR, let's focus on that. So what can you do to prevent an FBAR? Well, there's nothing that you can completely do to altogether avoid the audit, but there are some things that you can do to minimize your risks. First, continue to file timely and accurate FBARs. So if you've been filing FBARs constantly each year and they're pretty accurate and they're timely, that's great. It's not a test. It's not like you have to get 100%. You got to do the best you can under the circumstances with the information you have available or that you can get, right? Lots of foreign financial institutions, they're not Bank of America or Wells Fargo. They don't provide, statements in the same way. A lot of times you may just have a passbook account. You only went in there and updated it every few years, so that's the only information you have. You got to do the best you can under the circumstances. If you are out of compliance, you should consider getting into compliance with offshore disclosure. Why? When you do offshore disclosure, you're going in there and you're telling the IRS, hey, I messed up, I want to fix it, and there's different options that you could choose depending on what forms are missing and if there's any unreported income. The benefit, some people think, if I do offshore disclosure, now I put myself on the radar, which is a legitimate thought, but it actually works the opposite, which is now you're in compliance. You told the IRS everything, you paid a penalty, they know about it, maybe you qualify for a penalty waiver, but you were upfront. You set the narrative, you got to go in there before you're audited, before you're under examination, and that tends to reduce the risk of a future audit because the IRS is limited in resources still, and there's no need to go after you if you've already been upfront and gave them all the information. Very important, do not do a quiet disclosure. Quiet disclosure is when you kind of secretly submit your FBARs. Either you start filing forward even though you should have been doing it for prior years, or you go back and you mass file several years of FBARs. Now, some attorneys, they just want to sell you, so they'll tell you it's fine. Same with CPAs and accountants, they tell you not to worry. In reality, not everyone who does a quiet disclosure gets caught, right? Like I said, there's only so much man and woman power that the IRS has. But if you get caught doing a quiet disclosure, it will result in significant fines and penalties far exceeding what would have happened under the streamlined procedure. So if you're going to do it, at least know the risk, because at the end of the day, the CPA or the attorney could get in trouble, but it's your money. You're the one that's going to have to pay the fines. If you're under audit, what can you do to try to minimize the damage? One, try to make sure you have the most accurate balances you have. As I mentioned before, you may not be able to get all the information, but do the best you can. The IRS may ask for additional information. If you don't have it, they'll ask for the name of the institution and they'll try to get it. So if they can't get it and you couldn't get it, then it is what it is. But if you give them the information in like an IDR, an information document request, and then you tell them you can't get the information, and then they're able to get it, well, that puts you in a kind of precarious position as to whether you're cooperating or not. You should assume the IRS has information. So I get this a lot, right? Taxpayers come to us after an audit, and now they're worried it's going to be criminal. Why? They went into the audit. The agent asked whether, do you have foreign accounts? And on the tax return, they might have put no. And then the agent goes, you sure don't have any foreign accounts? And the taxpayer thinks the agent doesn't know. It's like, oh, no, I don't have any foreign accounts. But in reality, under FATCA, the Foreign Account Tax Compliance Act, these foreign financial institutions have already reported you to the U.S. government, so the government has that information. This is referred to as a reverse eggshell audit because they have the information, you don't know they have it, and now you're doubling down on your misrepresentation. That could lead to an issue. There's also eggshell audit, which is a little bit different. It's when you have the information, taxpayer, that the IRS may not have, but if you're under FBAR audit, chances are they already know something. Finally, you should try to resolve the penalty before it's assessed. Once a penalty is assessed, it becomes a lot more difficult to fight it and to challenge it. So try to negotiate the best you can before an assessment happens. If you're out of compliance, you haven't been audited, you haven't been issued a penalty yet, then there's various offshore disclosure tax amnesty programs that you can submit to. If you're willful, you do the voluntary disclosure program, VDP. If you're non-willful, there's various options available: streamlined procedures, delinquency procedures, possibly a reasonable cause submission if you qualify. We got a lot of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.